financial crisis recovery.
Foreclosure, short sales, bankruptcy, credit card debt, job loss, depreciating home values, money management. Peace of mind when it comes to your finances seems completely out of reach under current conditions, but there is a way to achieve it. For the next 60 minutes, you're going to find out how to cover your assets. Cover your assets.
You currently have to have one of those loans in order to refinance onto one of those loans. So if you currently don't have an FHA loan, or if your loan is currently not owned by Fannie Mae or Freddie Mac, the unfortunate thing is that there's not any other loan products out there that can help someone in your particular situation.
Yeah, that's what I'm hearing. But
Mike, this is Wade. There is another answer that's not here yet. And as Mike mentioned, there's what they call HARP 2.0 for Freddie and Fannie owned loans. In Congress, in discussions now, and with FHA, the powers to be that set the guidelines, there's something called HARP 3.0 in discussion right now. It's not out. It's in the legislative process right now. But in essence, I'll give you just a nutshot of the bill. It includes all lenders, not just Freddie or Fannie, because we know that problem exists, and you can help a greater amount of people by going to the servicer and making that part of the 3.0. That legislation is still being debated. It looks very positive. It's in committee, coming out of committee. You should see it in the near future. When I say near future, probably near the end of the year. So hang in there. There's going to be an opportunity for you in this 3.0, and there's not much out there about it. But if you go to the government sites, look up Senate, HARP 3.0, go to the finance banking committees, you can find some information on it. It's in discussions now.
all right, thank you very much.
You're welcome.
Appreciate the call in, Jeff. HARP 3.0, that's the first I've heard of that. And we've been talking, the three of us have been talking for the last year about when is the product going to come out that helps everybody or the majority of everybody, and this may be it.
I'm being the past president of the Mortgage Bankers and Brokers Association, legislative chair. I've had the opportunity to work with our elected politicians, Congress. I've had the opportunity to testify in front of the United States Congress, the banking committees. I am kind of a junkie here with that stuff.
That's
so
good.
I'll get home and I'll watch CNN and I'll watch the debates and really what's happening with the new director of FHA. They know that 3.0 has to come out because we're not containing this shadow inventory that's out there, or getting the economy rolling along a little bit faster, because there's only 7 million loans here, whether they're Freddie or Fannie or 8 million, whatever that number might be. But there's another 7 or 8 million out there with a variety of 5 probably big servicers that were involved in that settlement recently that helped the consumer out. But 3.0 is not out yet. It's still in debate. But if you're a CNN junkie and you like watching congressional hearings and testimony, it is in discussion. I listen diligently to it, and for the borrower out there in your position, or Mike's position, or Jeff's position, it's coming. And I doubt that most lenders even realize that, because you'd have to be very ingrained in this whole thing to pay attention to what's happening there, especially today with HARP 2.0, and Mike can attest to this. Lenders are so busy with it right now, and the problem's known. It is being addressed, and I think you'll have resolution. It's going to be called HARP 3.0.
And that's going to be an FHA product, right? And I think there was talks about they were going to cap the loan to value about 140. That?
The cap, on FHA, there is no cap, really. If you go to the guidelines of those products, there are no caps. The caps are put in place by the institutions themselves. One of the things in HARP 3.0 is they are going to lift those. And also the second component to 3.0 is when you have a second mortgage behind it, there's some difficulty getting them to cooperate with their subordinate positions. It's not going to be a question of asking anymore in 3.0. It's going to be a mandate.
Gotcha. So
there's
that'll
some,
help.
there's some really
That'll help out too.
Yeah, there's some great things coming for folks in those positions.
And then the other thing that comes to my mind too is that FHA mortgage insurance, which we know is expensive right now.
Yes.
So for a lot of people that are refinancing on FHA loans, they maybe have the lower mortgage insurance that was around a couple years ago. They refinance onto the new one. Now they're subject to the new mortgage insurance, which is eating up their interest savings by getting that lower interest rate. I think that might become a factor in this as well too, that people need to be aware about. You got any thoughts on that?
There is discussions, with the director of that particular entity or group committee about those exact things, about the private mortgage insurance or upfront MI, and then the ongoing monthly factors that equate to your payment. So there's discussions about those two, and how they can do a better job of really seeing a savings, which really helps ensure keeping their portfolio paid.
Right.
At first they've had to, because they've really become a dominant player, where 5-6 years ago FHA represented about 4% of the marketplace. Last year they represented 45.
Mm-hmm.
So they've had an overabundance in their portfolio. They needed to protect their assets with some reserves. That's why you saw those premiums go up. Now you're going to see them come back. And the talk that I've listened to and seen on television and read is that they're going to make those adjustments. In fact, I believe in June there was just an adjustment made on the factors.
Yep.
Yeah.
Do you have questions this morning? Give us a call. The phone lines are open at 651-646-8255 is the call-in number. 651-646-8255. You're listening to Cover Your Assets, Todd Rooker's new show on 1500 ESPN Twin Cities. CoverYourAssets21.com is his website. Check it out, and we'll be right back.
You're listening to Cover Your Assets with Todd Rooker.
And welcome back to Cover Your Assets with Todd Rooker. Jason Walgrave here filling in for Todd this morning. Wade Abid and Mike Overson. We're taking your calls and questions at 651-646-8255. The phone lines will be open all hour long. Best way to get a hold of Todd is his website, CoverYourAssets21.com. Also, Todd has the Financial Crisis Bible, which is a free download. You can find that at financialcrisisbible.com. Check out those websites for some great information, and feel free to give us a call this morning at 651-646-8255. Let's go back to the phone lines. Matt, good morning. How can we help you?
Morning. I didn't know if you guys wanted to start this HARP 3.0 talk, but
Sure.
you did. And I've got a 5-year interest only due up in about a year and a half, and I've been looking at the HARP program, and it is a Fannie loan, but it was purchased by Fannie, I think, in June of 2009, which is just after the deadline. And I was wondering if that's something you heard rumors about them addressing with 3.0.
Sorry about that. I had to push that button again. In the discussions that I've had the opportunity to watch, they have addressed loans that were outside of that category or timeline that you're talking about, because they're going global on the whole thing. And so you stand a good chance of having that happen, because the first time HARP 1, it was a great idea. It was not executed as well as it could have been because it was really new, and there was a little bit of resistance in the marketplace for a lot of different reasons. HARP 2.0 cleaned up a lot of it, made it a lot easier. A lot more people are being able to use that program, and it's a good program. HARP 3.0 is really the hybrid version of trying to get the first one right, and I think you're going to find as you follow this 3.0, you're going to see those little cracks that they experienced or gaps that they missed. They're trying to fill them in. They're trying really hard. So, I give them all due credit. You can't get everything perfect the first time. Sometimes, maybe not the second time.
Third
time might be the charm.
Yeah.
Well, I hope so.
Yeah, no, I do too, and I hope things go well for you.
Great. Thank you very much, guys.
You bet.
Yeah, so I mean, one thing I want to say about HARP 3.0 is that it's going to open the doors to a lot of different people because I mean, it was HARP 1.0 came out and it was kind of like what Wade was talking earlier about. Is that the box is about yay big, this many people fit in it. HARP 2.0 expanded that box. There's still some goofy guidelines. There's still some goofy dates that you have to worry about. Your loan has to be owned by certain places. So there's still, the box still got bigger, but not that big. HARP 3.0 is supposed to open up that box. It's supposed to encompass a lot more people, get rid of some of those time deadlines, get rid of some of those loan to value things that are coming up now, which will hopefully, expand and be able to get more people to refinance. And the ultimate goal is they want people to stay in their home.